Hey guys, and welcome back to a new ICT simplified video, this time covering the order block. Alright, let's look at the order block. I already prepared the checklist, and as you can see, it's very similar to what we saw in video 1, 2, and 4, where we talked about the 2022 reversal setup, the silverbullet setup, breaker blocks, and now we're adding one more PD array to our list of confluences, which would be the order block. And you can combine them all together for very, very high probability setups. Let's get started straight away. Right now we're looking at the bullish order block example. And the easiest order block to identify is when you already see bearish market structure. So we form once again lower lows and lower highs, lower lows and lower highs, and a new lower low. This is step 0. This is our condition that we need before we have all the other conditions checked. So we need a trend, lower lows and lower highs, or higher lows and higher highs. So basically an uptrend. I invert the scale here quickly and imagine this candle is an up closing candle now, and this would be our bullish or bearish order block. Alright, so let's get back to our bullish order block example. We have identified our trend. We broke, that's step number 1, we broke below our most recent lower low. Right here, we break below that and we continue to go lower. So, and then step number 2 is we need the displacement or the structure shift. Let me grab the path tool. So right here now, we get our displacement. We break above our most recent lower high and we successfully shifted structure. If you have just watched the previous video about breaker blocks, we could look now for, after having shifted structure with the displacement and sweeping the most recent lower low, we could look for our breaker block. Could look something like this. We have a big up closing candle, maybe like this, and we continue to break through the lower low, and now we displace, we have our breaker block, and we have our bullish market structure shift. Alright, so what's the order block all about now? To identify the order block, we have to first of all identify the lowest down closing candle or an array of consecutive down closing candles. So if we have 2 or 3 down closing candles right in a row, we can look at because price is fractal, we can look at 2 or 3 or sometimes even 4 consecutive down closing candles as our order block. And then I simply use a line tool and draw a horizontal line from the high of the slowest down closing candle that we have already identified and label it as a bullish order block. So this entire down closing candle becomes our bullish order block, where we would expect support for a continuation move into buy side liquidity. After we have our confirmed market structure shift with the displacement, we pull back into that bullish order block and continue into buy side liquidity above all the old lower highs that we have left behind for our bearish market structure. And to quickly also give you an example of how it would look like for the bearish order block, exactly the opposite, but this time we actually have a up closing candle, so we identify our highest up closing candle before we displace and break lower, and this becomes our bearish order block, where we find resistance to deliver lower into sell side liquidity. And now we already have 3 PD arrays that we can use to enter on, and especially if they overlap, that's when it becomes really, really, really powerful for a high probability trade setup. We are in an uptrend. We formed the 2022 reversal setup, but still the question is, how can we enter? Okay, we have our displacement and we pull back. We could have a free drive setup here, like in ICT simplified video number 3. We could retrace into our bearish order block right here. We could pull back into our breaker block, our lowest down closing candle in the bearish scenario. So this becomes our breaker block. Or simply of a bearish fair value gap. But the best setups, they always align. So let's say our breaker block is a little bit bigger, like this, and we have this overlapping confluence. We have a bearish fair value gap, we have a bearish order block, like we just discussed, and we have a bearish breaker block, where we expect resistance from all these three PD arrays, and they happen to align in the middle right here, and we deliver lower from that. Those are my favorite setups. And now let's jump into a real price action example. Once again, we're going to be looking at the NFP week. At the time of the recording, this is the most recent week. And let's do another exercise. Please identify the order blocks in, pretty much last week. The NFP week starting from the 1st of October until the 7th of October, basically. Alright, I hope you already paused the video and you're now done marking out the order blocks. We already talked about it a little bit in the last video where we covered breaker blocks. So let me quickly remove the breaker blocks because all we want to focus on are order blocks for now. Right here, let's start with this one over here. We form higher highs and higher lows. So we are in a bullish market structure. Higher high, higher low, higher high, higher low, higher high, higher low, and higher high. And then we displace. So we look for our highest up closing candle before we shift market structure, which would be this one right here. And this now becomes our OB minus. That's how I label bearish order blocks. That's also how ICT does it. At the top, we put it to the right. This is our bearish order block. And at the same time, next to this bearish order block, look what else we had. If we remember what we learned in ICT Simplified, number 4 in the previous video, we look at the most recent lowest down closing candle before we displace, which becomes our breaker block. And what else do we have right here? A bearish fair value gap. If that's not a high probability setup, I don't really know what is. We also had some trendline liquidity, and this is exactly that overlapping confluence that I talked about earlier. And from here, on Monday, the 1st of October, we delivered into first day's low, and then on Tuesday, we managed to deliver into the previous week's low during the New York AM session. So this is the first order block that we had on our chart during the NFP week. The second order block that actually supported price during the NFP explosion on last Friday was right here. So we saw that we made lower lows and lower highs from this little downtrend. I can mark this out again. High, lower low, lower high, lower low, lower high, lower low. And then because it's the end of the day, the market is becoming less volatile. We form a lower high, lower low, lower high, lower low. This is during the early Asian session, so the lower highs and lower lows aren't as far apart as they used to be. Lower high, lower low, and we get our displacement. All right, now we have everything in check that we need. Initial conditions. We look for the lowest down closing candle, and we can see this is our lowest down closing candle for our potential bullish order block. But as we discussed before, it can also be consecutive down closing candles, because on a higher time frame, let's say for example the 2 or 4 hour time frame, we might have just one bearish down closing candle. So right here we want to look at the most recent consecutive down closing candles as our order block. What else do we have aligned here? Most recent up closing candle before we displace lower one more time. This becomes our breaker block, like in ICT for beginners video number 4, our breaker block. And what else do we have here? Also a nice little bullish fair value gap. So already here on Wednesday, we shifted market structure. At the London Open, we continued higher. At the New York Open, we reprice back into our order block, bullish order block, breaker block, paired with a bullish fair value gap. And look, we got a beautiful move away from this high probability reversal area. Very simple. And then we look at NFP. From here on, we consolidated prior to NFP. NFP news dropped or came in. We swept sell side liquidity below this low right here. And below this low right here. But still, we kept on holding inside our bullish order block. We look at the most recent consecutive down closing candles. This is our bullish order block. Inside our entire bullish order block, we have a bullish breaker block and a little bullish fair value gap. And so looking forward to next week, I want to see what price is doing inside of this bearish order block. We already priced into it, paired with the bearish breaker block, and we immediately rejected. So going into next week, I want to see what price is doing right here, and if we continue through and above it to clear this buy side liquidity and all the buy side liquidity that we have to the left. If we go to a higher time frame, what could we use here? A bullish order block. I would look at this lowest down closing candle as our bullish order block. If we go to a daily time frame, it's not as easy to see. We don't have it there yet on the daily time frame, but if we drop down to the lower time frames, we can see that. If we stay on the 1 hour time frame to keep it consistent for our analysis right here, this would be our bullish order block. Let's make this green again. Because right here, what did we do? We formed higher highs and higher lows. We broke sell side liquidity, so we broke these two short-term lows. We didn't have to break this old order block, but now we have a new order block out of this bullish order block. We look at the most recent down closing candles before we displaced and shifted structure right here. That's where we had our bullish market structure shift. And let's see what price is going to do around the 4,300 level. We have a bullish fair value gap paired with it, a big bullish fair value gap. We have our order block right here at 4,303. And we also have our breaker block. Most recent up closing candles here on an hourly time frame. This would become our breaker block. So let's see how that is going to play out next week. Alright guys, take care. Thanks very much for watching. And if you want to see me execute all these ICT concepts live, join my Patreon and join my Discord server. The link for that is in the description box below. And yeah, I will see you in the next video or in one of my live streams.